Good morning, everybody, and welcome to this weekly outlook for weeks 49 and 50. As every Monday morning, we are almost done for this 2020, but at least the trading level has not been so bad. First of all, remember that this is not investment advisement, so just make your own analysis. So how this will be structured, once again, at the end of the video, we will analyze some instruments, look at the charts. This week, dollar index, SP500, and copper. Once again, these are among the most traded instruments. This week, we'll also have a very fast look to some thoughts about how some indicators are getting stretched in the market. This is because JP Morgan just came out with a newsletter to its client. You can find it also on the first page of Bloomberg, just talking about this. So, very fast, let's start about last week. We had NFP data in the US, we disappointed, labor market growth is slowed down. This hasn't moved markets that much. Dollar has been the main player of the week. It broke down 92.75 dollar index, plunged quite a lot. OPEC Plus had their meeting. They reached finally an agreement, OPEC Plus Russia, to roll over the production cuts. Oil partied, both Brent and crude oil, US crude oil went high, and Brent touching almost 50. We also had some PMI data, and as has always been during last week, they have been decent as for services, not so good as for manufacturing. So, but just get rid of last week, and let's see what we will focus on this week. First of all, the Euro Summit on Thursday and Friday. European governors must find a common backstop to the Single Resolution Fund. They also must agree to a treaty reform of a European stability mechanism. We must talk about this. You also perfectly know that we have a very final weeks of Brexit. We have some headlines this morning, and so we must pay attention to this. This will be also the week when ECB will communicate its interest rates decision and its monetary policy on Thursday. Also, Bank of Canada will do this on Wednesday. Market is widely expecting ECB to ease. They will certainly ease for some new or unconventional tools, or just increasing the one they are already in use. We will have also some GDP and trade balances data from Eurozone, Japan, UK. Numbers of Q3 expected to rebound for sure, being the yearly one still negative. We already had the trade balance data from China, where export have grown really a lot, standing almost 15%. We will have more trade balance data from Germany, France, Italy, UK. Just to let you know, if any of you does not know it, that trade balance together with interest rates is one of the most important things on the long term for the price of the currency. Yeah. So now we're talking about this report from JP Morgan sent to the clients, and so we decided to talk a little bit about a couple of things as well. So the idea of JP Morgan, while being bullish into 2021, you know that both Goldman and JP Morgan are seeing SP500 at 4,000 next year. Anyhow, JP Morgan is warning about the crowded trades. What are crowded trades? Trades where too many investors are in. It looks like there's only one direction. And they have identified them with being short dollar, long copper, long Bitcoin, but also being longer, having more exposure on developed markets, Europe, US, UK, and much less in emerging market. So meaning that JP Morgan is seeing more value in emerging markets right now. Also, take advantage of this point of the newsletter for outlining a ratio that many commentators in the market have been looking at lately. And this is the put call ratio. Put call options, you're already used to them, you can trade them in our platform. And okay, the put call ratio is at lows, historical lows last seen during the dot-com bubble. Right, so it has never been so low during the last 20 years. What does this mean? Basically, it means that the price of buying a put, when you buy a put, you think the market will go down, has never been so cheap in comparison with the price of the call. So you always have to pay attention where there are such strong imbalances. That does not mean that this will revert this week, next week, or not even in 2 months, but pay attention to these kind of things. Okay, let's finish with this and move on to the charts. We are gonna start with the dollar index. So the dollar index has come down almost 15 big numbers this year. Still, it's more expensive than it has been for many years during this millennium. All right, what's important for us to note that among between 92.5 and 90.5, it's all an area that has been important in the past, here in 2004, 2005, more recently 2017. Does not have to be like a final support, but it's an area where bulls and bear, long-term bulls and bear, will probably fight for deciding a new direction. We just said that JP Morgan is seeing this as a very crowded trade, and so to pay attention on it, to be careful. Of course, on the midterm, we cannot see any special bullishness for the dollar if it does not break above this long-term average and this trend line, so below 93 area. But don't blindly believe it will continuously depreciate. Right. Copper. Let's have a look at copper once again. Okay, it's not working right now, so let's go to SP500 before. Hopefully, on SP500, I just wanted to highlight a very long-term perspective without going in further details. Okay, here you can see the trend that started after the financial crisis. The lower bound is clear. And I try to put the price within what some commentators call a megaphone, a very long-term megaphone. Yeah, it's a funny name, at least for me. That started in 2011-12 after the Euro crisis. And this just to say that even if it's very difficult to go short, SP500 does not make sense at this point, valuation does not look to be historically, statistically low. Also have a look how it's diverging on a weekly basis, RSI, but we will need absolutely some time to thinking about not being long here. So let's see if hopefully copper is now working for us. Yes, we've been lucky. All right, and let's have a look here. Put it into perspective, it's going up this year. The rally has been astonishing, has broken the highs of 2017, 2018, and has pushed higher last 2-3 weeks. This area could be an interesting area, but the price could absolutely still go higher, have more important resistances here, 375 and so on, as you can see. However, let's go and look it in the daily. You see the break of a previous high of a couple of years ago. Let's try to look at this, as once again JP Morgan is warning about this trade being overcrowded. We can clearly see a trend line. The lower bound of the trend line is very clear. So what we're gonna try to have a look at here, and here you just see how to build a channel. Let's try to put the price action within a channel, the hypothesis of a channel. And if we do this, we see that price is now very close to the higher bound of a channel. It's once again here as well, it's not a good idea to go short without having some more confirmation, aka lower lows. But the RSI is overbought. The MACD is starting to tightening. So have a look at this one. That's it for the weekly outlook. You probably heard this morning there's more news related to Brexit. They will be with us till the end of the year. So get used to it. There will be for sure volatility in cable. That's it. Have a very nice week and a good trading week, especially. Bye bye.